Hello and welcome to interest.co.nz. I'm Gareth Vaughan with our weekly currency wrap-up with Dan Bell from HiFX. And Dan, yet another not dull week in the currency markets. New Zealand dollar, some more strength there against both the US dollar and especially the pound.
Yes, indeed. A very strong week again for the New Zealand dollar against most of the major currencies. We pushed up to another new post-float high against the pound overnight, over 52p. So really getting into some uncharted territory there. Against the US dollar, also another post-float high this week, up around 83.30. So very, very strong. Against the euro as well, up over 0.58, and against the Japanese yen, up just under 68. So the New Zealand dollar has been one of the strongest performing currencies again this week, and from a trade-weighted index point of view, it's just sitting just under 72 at the moment. So.
And that's fairly high by historical standards too, isn't it?
It is, yeah, it is very high. If you go back to when the Reserve Bank intervened in the currency market, the trade-weighted index was up around 77. So we've got a fair way to go, and part of the reason we're obviously lower on a trade-weighted basis is because against the Australian dollar we're still sitting around sort of 77, which, you know, based on the last sort of 10 years is still reasonably weak.
Okay. And we had a couple of interest rate hikes in China and the ECB as well. Mm-hmm. What sort of impact have they had, and did they act as they were expected to?
Yeah, the China came out this week, raised their lending rate by 25 basis points. The market had been expecting China to raise their interest rates again, but the timing of that they weren't too sure of. So there is no real schedule as far as when China changes interest rates. It had a pretty muted. There was a pretty muted reaction to the markets. We probably saw a little bit of softness and risk appetite following that announcement. But the general consensus is that this is actually the last rate hike in the current tightening cycle for China, and it is still actually well below the higher levels in their interest rates before sort of 2008. So I think the market is getting a little bit more comfortable with the situation in China, and it wasn't really too much of a surprise. Also overnight, the European Central Bank raised their interest rates by 25 basis points as expected, and that had been very much flagged by the ECB at their previous meeting. So it takes their official rate up to 1.5%. In their statement, the Trichet, the governor there, he pretty much indicated price pressures will continue to be a focus. So he's going to be watching inflation, but there was no sort of rhetoric suggesting that there was another imminent rate hike, and the market's expecting probably the ECB to raise rates again, December this year.
And obviously the sovereign debt crisis rumbles on. We had a big credit rating downgrade on Portugal, which they weren't too happy about, and the Greece situation is still there. So those factors still big issues in the currency markets.
Yes, they are. Although, we had the Portugal downgrade story earlier on in the week, and Portugal downgraded by Moody's. But I think to a certain extent the market is getting a little bit sort of desensitised, to the whole sort of European debt crisis. We've got the ongoing issues with Greece, although over the last week and over the weekend they effectively passed the measures to get the first sort of bailout. So from a liquidity point of view or a cash flow point of view, Greece has got enough money in the short term, but going forward there are still ongoing concerns about Greece and how they're going to afford to pay their debts whilst their economy is going backwards, and obviously looking further out. The ongoing political tensions that are going to arise as they try and put these austerity measures in place, with a pretty weak economic backdrop. So, the Greece story is certainly not over yet.
And look, obviously we all head off into the weekend this evening, but there'll be plenty of people keeping an eye on the non-farm payrolls jobs data coming out of the US tonight. Mm-hmm. What are you anticipating from that?
Yeah, so the US non-farm payrolls employment data is one of the most closely watched pieces of economic news out of the States, and it gives us a very immediate measure of employment, the employment market in the US. That's released tonight. Now, last night we had a precursor employment data, the ADP data, which came out twice as good as the market was expecting. So suddenly the market has actually revised up their expectations for the non-farm payrolls data tonight from around 75,000 new jobs to over 100,000 new jobs. And you've got actually some analysts that are thinking that the jobs number may actually come in over 150,000 new jobs. and unemployment to remain steady around sort of 9.1%. So a bit of a positive, potentially quite a positive employment data to be released tonight.
And look, obviously next week we might finally get the New Zealand first quarter GDP figure. What impact did it have this week when that got delayed by a week, and what are people sort of thinking might be in it when we finally see it?
Yeah, it was a bit strange, wasn't it, really? The GDP was expected to be released this week, first quarter GDP, and the statistics, New Zealand came out and said they were going to delay it another week. If you wanted to be a conspiracy theorist, I think there's a couple of things you could say about that. One, maybe the GDP data was a lot better than perhaps it was expected to be, but on the other hand, maybe it was a lot worse. So it's kind of hard to say, really. Obviously we're going to get that data. It's very much a historical piece of news, and it does take into account that first quarter where there was a lot of uncertainty associated with the Christchurch earthquake. Yeah, it's going to be interesting once it's finally released. And
looking on to next week further, is there anything else in particular that the markets will be looking closely at next week or are eagerly anticipating?
China's got a raft of data out next week, including their GDP, industrial production, money supply, and retail sales numbers. So the market, continues to watch China a lot more closely, and so that economic data will be closely watched on Thursday next week. Elsewhere, we've got bits and pieces out, but the focus in the immediate term is the US employment figures tonight. So that's going to be very interesting.
Well, thanks for that, Dan. That's Dan Bell from HiFX, and I'm Gareth Vaughan at interest.co.nz with our weekly currency wrap.